Righto, money miners, here's a weekend special for you with one of the old school mining magnates, which just goes perfectly with the new school open pit mining magnate. MMS who are ready for an open pit contract yesterday. Gear, people, get in touch. Don't miss out on this early bird offer, you'd say.
They told me, mate, that, they just have spare fleet there. They don't want downtime. They're aligned.
Mate, they've got the fleet driving around the country at the moment just because to statistically give themselves the best chance of getting it to your side as quick as possible.
Makes sense.
Mate, give them a buzz. JD, mate, you locked down a big dog while you were over east.
We did, mate. So Owen Hegarty is who this discussion is with, and it's a bit different. So I want to introduce it sort of appropriately because we spend a lot of time discussing the sort of here and now, the markets, where they're going in the future. But given our sort of relative youth, you could say, I think there's a lot for us to learn. So I thought it'd be a good opportunity to speak with someone with a boatload of experience, and I think Owen sort of fits the bill perfectly. He worked at Rio for 25 odd years, ended up heading the Asia part of their business as well as the Aussie copper gold part of the business. That is when the company was called CRA, shortly before the merger to become Rio Tinto. He then went to start Oxiana in 1995, which ultimately merged with Zinifex, which we chat about, which is what became Oz Minerals in sort of 2008 and onwards. He then left, in the interim, he joined the board at Fortescue, ultimately became the vice chairman at Fortescue. So he has done plenty of roles. And then if that wasn't sort of enough, in the early 2010s, he started EMR Capital. Now, people know these guys as owners of Ravenswood, Kestral, Lubambe, amongst others, 29 Metals, another name. They have done a number of deals. They've raised 3 funds since they started in the early 2010s. So plenty of experience for us to sort of chip at. So we spent a lot of the conversation going through what he sort of learnt along that journey, some of the ups and downs along the way, and sort of lessons that we can kind of pull out in our journey going forward.
Interesting when you say the links between what EMR's got now and what Oxiana had, like with Golden Grove and things like that. So, no, very interesting. It's going to be a ripper, JD. Good work, Sunshine. Let's rip it, eh?
Let's go. Owen Hegarty, thanks for making the time and coming on Money of Mine.
Thank you very much for giving me the opportunity, Jonas. Lovely to be here.
The first question I've got to ask you is one that I sort of came about in my research, listening to a podcast you'd done a couple of years ago. You called Melbourne the mining capital of the world. And I think a few people in Perth might pick a fight with this comment. Do you still sort of feel that way 30, 40 years after starting your career here?
Definitely still. I mean, not so much the capital of the world, but the capital of the universe, Jonas, is Melbourne. Bearing in mind that we started it all here about 170 years ago. I was a very young fellow at the time, of course, but this was the gold rushes, remember, back in the 1850s or thereabouts. So that's how a lot of the surplus that was grown from mining here in Victoria, a lot of the institutions started at that time, and then it developed out into other areas. But that's why you still find that BHP is headquartered here, for example, because that's where it all began in a way. And as I say, a lot of the surplus, and the Melbourne Mining Club, Jonas, is a very big institution here. So we get plenty of people coming to that. But of course, yes, it has moved more to Perth. Some of my best friends actually come from Perth, Jonas. So definitely much more a centre these days.
Well, we can take that argument offline and keep going with that one, but we'll keep going. I want to dig into a lot of your experience. You've spent a lot of time in the mining industry, and then get into some of the deals you've done here at EMR and everything sort of in between. Then looking forward, but I want to go back a few years to what was CRA, what became Rio Tinto, where you started your career some time ago, and I want to hear about the sort of entrepreneurial culture, how you sort of see it at that time. A lot of people make the criticism of these majors that it kind of stifles the entrepreneurial kind of spirit, but you've clearly shown through your career that you've got that, and it wasn't stifled at CRA. What was it like working at that organisation at that time, and how does it sort of differ from how you see the company nowadays?
Well, Very interesting, but a very broad question, of course. So, yes, going all the way back to the Rio Tinto days, no worries. I mean, I spent 24, 25 years with Rio Tinto, pretty much all their companies, all their countries, and all their commodities. So very lucky, actually, to have that sort of span of career with Rio Tinto. Wonderful company, wonderful people, and a wonderful culture. One of the things that I thought about Rio was, with hindsight and with some present sight, whilst I was working there, was they really had a very strong growth and entrepreneurial bent. So it wasn't just a business as usual. It was very much a growth orientation and entrepreneurial people there all the way up and down the chain, going all the way back, in fact, to Sir Val Duncan, would you believe? Now, that goes back a long, long time as the chairman of Rio Tinto, and I was lucky enough to be in London and working for Rio when Val was in charge, effectively as the executive chairman of the company. So he had that entrepreneurial bent. It actually came through into the Rio Tinto CRA people. Here at Rio Tinto CRA in Melbourne, the really, really wonderful people like Sir Roderick Carnegie, John Ralph, many of the leaders of Rio Tinto had that growth entrepreneurial orientation.
So what are some of the assets you worked at? Like you mentioned, you spent sort of 24 years there. You ultimately became the managing director of Rio Asia, as well as the copper and gold assets, as I sort of understand in Australia. Can you run through some of the projects and mines you sort of operated at through that period?
Yes. Well, I think probably the main break, if you like, if you want to call it that, inside Rio Tinto. I mean, as I had a lot of different areas and so on. Just terrific people, terrific background. So very lucky, really, in a way. But then the last several years of my so-called career there, if you like, was with in the Asian area. So we were developing new markets, we were developing new businesses in the Asian region, and that came about. It was very much a push and a drive by Sir Rod and others on the board at that time, and John Ralph in the senior management ranks, to build our businesses in Asia, because that's where the growth was clearly going to come from, or was clear to some at that time, maybe not clear to others, type of thing. And I think that we got on the front foot. We got on the front foot with Comalco. We got on the front foot with our lead and zinc businesses. We got on the front foot with our copper business. So we were looking to not only grow our markets there, but to grow our business in that part of the world, which would ultimately buy products from Australia and from other sources of metals and materials from other Rio Tinto group places, if you like. So that's and I was part of that campaign, if you like, that took on for a long time there. And in a way, it was very successful. Not very much, attributable to me, but some of the pioneers there did an amazing job in terms of actually getting involved in businesses, getting involved in that market development activity, and you could literally see the countries growing there. Jonas, we're talking about Thailand, Vietnam, Singapore, Indonesia, Taiwan, Korea. Japan was continuing to develop, and China, of course, just starting to open up. So really very exciting times, and probably the most, luckiest break, if you like, that I had a lot of time in that part of the world and a lot of time with those businesses. So that to me was an important step to actually be part of that.
So that Asia component is a sort of big feature in your career. Is that something you sought out? You wanted to experience, that part of the world, the culture there, operating, doing business in these parts of the world, or is it more Rio wanted to expand there and they sort of said, "Hey, Owen, are you the man for the job? Do you want to go over there?" How did that sort of all come about?
Well, it was a drive from Rio Tinto, and then, of course, it became a personal drive in a way that you could actually see the long, strong demand for all of the metals and commodities that we were involved in, and other metals and commodities that we weren't involved in. Rio had a bit of a pause there in terms of some of the things that it was actually doing, and copper and base metals, and around about the same time, I saw the opportunity to get involved in our own business outside of Rio Tinto, getting involved in a business growing on the strength of the growth in Asia, in all of those markets, sourcing materials from Australia and other parts of the world, and being involved in mining not only in the existing and more established mining centres, but in those Asian mining centres. And that's effectively how we started Oxiana. Got involved in, Asia Pacific base and precious metals with Australia and Asia.
So let's tap into that then. You leave in the early 90s CRA, which later merges. By that time, you're managing director of Oxiana, sort of 1995 period, as I kind of understand it. What is that first 5 years like there? So the Sepon mine comes online in 2000, but you're doing something quite entrepreneurial. Why did you decide to leave? And talk us through those sort of early days.
Okay, I'd spent 25 years with Rio Tinto. They were having a bit of a pause, if you like, in terms of the base and precious metals areas. So I saw the opportunity because the growth was continuing in Asia, and the growth for copper, other base and precious metals, whether it was aluminium, whether it was zinc, whether it was lead, whether other and nickel, whether all of those things continuing. So I saw the opportunity to jump out and put together capital, put together people that I actually work with inside Rio Tinto, and begin our own journey in the mighty Ox. We grew a company there from a few $1 million to a few $1 billion. As I say to people, the overnight success that took about 15 years or thereabouts, from the mid-90s to the mid-2000s and late 2000s type of thing. So it was really just the opportunity to be able to do that. Now, what was it like? It was never simple, never easy, leaving the mothership to go out sort of pretty much on your own, with friends and family support. So never simple, never easy doing that. And those first 5 years, that's what you asked, the first 5 years. Well, it was really quite hard work. I mean, you spend your whole day, your whole week, your whole life actually out there talking to people about what you're looking to do, talking to people about your assets, raising funds to actually keep doing the work on those assets, and doing your day job all at the same time. As I say to people, at the smaller resources entrepreneurial end, you spend 100% of your time talking to people about your company. You spend 100% of your time raising money to do the things that you're talking about, and you spend 100% of your time doing your day job. So it's a big task.
Did you ever sort of think in that period maybe it would have been easier just hanging on and had it pretty good at Rio?
Well, there were plenty of times, Jonas, during that the first 5 to 10 years that I thought, well, maybe I should have stayed at the mothership a bit longer, but not really. Look, we were going quite well. I had good encouragement and support from friends and family. Had very good support from all of those things that we were doing, the businesses that we were getting involved in, and the main one of those, of course, was in Laos, in the People's Democratic Republic of Laos. Up there, south of China and to the east of Thailand and the west of Vietnam. So in that particular corner there in Indochina. And it was a Rio project. And we thought probably a bit too small and a bit too far away for Rio. So we got involved, and that became our flagship, if you like, to in gold first and then into copper. And we grew the business based on that very good foundation up there.
So a lot sort of starts coming together in that mid-2000s period. You've obviously got Sepon, as you sort of just described. By 2004, you consolidate Prominent Hill. You do a deal with Minotaur in 2005. You buy Golden Grove. just to go back to the Asia bull market, is there a point in time where you really were able to point to and say, this, what's happening in China is quite something else. This is going to last for a really sustained period, and it's going to materially change the mining businesses across Australia?
Well, it was around about that time. Remember, there was a Asian financial crisis at the end of the 90s. So that again, that was that sort of held everybody back around about that time. So it was tough enough actually getting things done, and then the Asian financial crisis. So you had banks and debt markets and equity markets in difficulty. Countries were, the Asian countries themselves are obviously poors in terms of growth. But at the same time, you did see that underlying current of strong growth, particularly from China. And at the same time, you've got Taiwan, you've got Korea, you've got Japan. So that Northeast Asian complex was continuing to grow and supply goods out into the whole Western market. So Asian financial crisis didn't last for too long, type of thing, but it was around about that time, effectively the turn of the century, if you like, that it was starting to become very clear and evident that there was, it was going to be stronger for longer here. That you did see that, you could see that growth coming, and then the next 20 years or thereabouts, you've seen everybody get on board that super highway of economic growth and prosperity, or looking to get on board. There's still plenty of countries that are looking to continue to grow. So it was really during that time we started the operation there in Laos. We built the gold mine. It was operating very well. We expanded the gold mine. We got involved in the copper mine. Needed something in Australia. Remember that we're in the People's Democratic Republic of Laos here. It's not that well known in this part of the world, not that well known to ASX investors, not that well known to worldwide investors. So despite the fact that it was actually going very well, that's the good thing about it. So we needed something in Australia or nearby, something a bit more familiar, which is, as you say, how we got involved with the project in South Australia, the Prominent Hill, ultimately built that mine. That was the mine that had the 7 to 8 year life to begin with, and will now go for 37 or 48 years or thereabouts.
I've heard that before.
Prominent Hill. So did a terrific job there, the whole team putting all that together. And then we bought closely on that Golden Grove and here in Australia, and multiple other acquisitions over time. But that was the time. It was around about the turn of the early part of the 2000s, if you like. Good strong growth, good pricing, some good luck, and some breaks, and a couple of some good people in the firm, and some good decisions. Put it that way. So put all of those things together. Jonas gave us the key success factors to be able to build the business.
So just to go deeper on accumulating the assets there's sort of differing views out there about the revenue diversification across commodities that a company should kind of have. And I guess this one kind of changes over time. A lot of people point to copper today, and these guys, trading on premium multiples if they're not, within a diversified miner. How do you kind of think about that? Was that always the ambition to have a bit of gold, have a bit of copper, have other base metals, zinc and lead, just to build that sort of diversification and rigidity within the business, or did that just sort of come about organically?
Well, I think a bit of a combo. We had a vision, and of course, as you build the business, your vision tends to expand somewhat over time, depending on the capability of the assets that you have and the people and the support group that you have. Okay, so we started very clear vision. We're going to build this gold mine, and then we're going to expand the gold mine. Now we're going to add the copper mine, because we were copper and gold people. We saw, we saw that gold was going to continue to perform because it had outperformed everything else up until that time. And we saw copper was going to continue to perform because of its diversity of uses, if you like, in terms of copper. Red gold, we called it at the time. So, you've got you've got two very good metals. But then outside of that, we wanted to add others, including nickel and zinc, say, so sort of base and precious metals. The bulk commodities, whether it was coal, whether it was iron ore, really had to come next. Let's build this base and precious metals business, and then perhaps go to diversify later. Because Jonas, in answer to your question, we saw a long-term future for a good scale mining and minerals processing company to be reasonably well diversified. Didn't want to focus only on base and precious metals. We thought we should add to that metallurgical coal, for example, and iron ore. In fact, ultimately, because of the steel industry growth potential, and the steel industry, as you know as well as I do, has actually grown enormously over the past 2.5 decades. So type of thing. So it's very much horses for courses. You've got to focus on those things that you've got in hand. You've got to have the vision, and it's really a step-by-step approach. And that's where we wanted to take this business, because we think that long-term shareholder value in a mining company is grown by taking it all the way down. Now, that's the BHPs, that's the Rio Tintos, that's the Anglos, that's the Glencores. They're those big guys. Long-term, sustainable, high-return businesses. That's where we were taking the company.
I swore he was just about to mention MMTS then when he was talking about long-term, sustainable, high-return businesses. Geez, didn't that come into – that's when they're talking for FMG, Rio, BHP, or just MMTS, same sort of – same definition.
Tongue. Yeah, rolls off the tongue.
The OG of mining title compliance in all Australian jurisdictions. I'll just repeat that. All Australian jurisdictions. Mate, cut. It reminds me of that. I think we've done it before, that Wolf of Wall Street thing, like cutting edge land monitoring systems for finding new title application opportunities across Australia. Similar to, what was it called? Aerotime.
That's the one. Yeah.
Pretty much the equivalent of that, but not a penny stock. So, mate, they are that good, MMTS, at doing this. They know in advance via telepathic messages whether mining owners are even considering not renewing a title or selling one.
Every corner of the country, every corner.
Up here, it's just messages coming in.
Mate, do you know how valuable a mine is if you don't have title to it? It's not valuable.
Good for nothing. Good for nothing.
The industry leaders.
Mate, you give either Helen or Shannon a call and just be prepared to be impressed by their awesomeness.
Just feel at ease. Go MMTS.
You beauty.
So come 2008, it's been a hell of a 13 or 14 years. And you announced this big deal, sort of headline $12 billion merger, Oxiana and Zinifex coming together in March of 2008. So the beginning of, what ultimately became a volatile year all around the world. But I'm keen to tap into doing a deal like that. So I was reading some articles in the AFR and the Australian from the time. And there's talk that this deal took, over a year to kind of piece together. What was sort of crafting that deal like, and what are the underweighted factors in doing a deal of that sort of magnitude?
Yes, well, again, it was, as you say, it was a volatile period, so it was a pretty tough time. But we saw just going back to my point about the diversification, we think you've got to get bigger. And you've got to be more diversified. There were multiple opportunities for us at the time to do that. We had a number of organic opportunities, and we were pursuing those, and we had the wherewithal to be able to do that. But we thought there were some inorganic, some acquisitive type opportunities. Again, with diversity into the bulk commodities, and with diversity into base and precious metals. So actually, the merger with Zinifex of about the same size was whilst you say it took 12 months or so to do, because the GFC sort of got in the way a bit there, but it was one step in the road to a bigger, wider, diverse vision that we had for the company. So it was one step. It had, world-class operations, and it had a very good growth profile itself. And we knew the people, we knew the industry, we're very comfortable with all of those things. So it was a marriage or a merger that was actually going to be relatively straightforward in terms of putting the companies and the people and the projects and the synergies and so on together. What it didn't become straightforward because of the GFC. It just interrupted the whole process, unfortunately. But the pieces were picked up and it went on to be very successful in back into two companies, MMG and Oz Minerals. So, I mean, all of those things ultimately worked, but they got sort of interfered with, if you like, during the GFC. But in answer to your question, Jonas, it was really part of a strategy to put together multiple commodities because we think long-term value is grown by having a good, diverse stream. So put those multiple commodities together over a period of time. You don't do it simply. You don't do it easily. You don't do it real fast time. And you've got to take the opportunities as they come to you and you can actually create them. So it does take time to put all of that together.
So one of the big factors at that time was that credit markets just really locked up. And as you sort of mentioned before we spoke, bankers wouldn't even pick up the phone. And this became a real tough point for what became Oz Minerals, the merged entity there, with the refinancing of the debt hitting hitting a hump in the road. Having experienced that and looking back with hindsight, how do you think about the debt levels within a mining organization? Not necessarily like technicals, EBITDA times net debt levels, but how do you kind of think more holistically about the leverage within inside a mining business, having lived through that period?
Yes. Well, look, I think it's very much horses for courses. I mean, at the time, of course, of the GFC, as you say, you couldn't get the banks to answer the phone, right? They weren't responding. It was very difficult to whether it was a refinance, whether it was a deferral, whether it was really some elementary questions that you wanted to talk to them about. It was just a very, very difficult time. And it wasn't as if the company was in any way, shape or form over-leveraged. The debt levels were relatively modest relative to, as you say, EBITDA multiples and various other things at the time. It's just that one or two were coming due, so as to speak. And that just made it a bit awkward from the very short term. So how do we think about it? Well, we think about it pretty much the same way as everybody else does. It's got to be within your means, so as to speak. I mean, you must always be considering leverage to ensure that you provide the right returns to your equity shareholders, but it's got to be within your means. Whether you call that modest levels or reasonable levels or 5 times EBITDA or 2 times or what with hedging, without hedging, long-term, short-term, working capital, whatever sort of metrics and so on that you want to put around it, you're always thinking of those sorts of things, and you're always looking at it with one eye on, the future. We're talking about interest rates. What's the Fed going to do? What's the RBA going to do? So you're always looking at those things, and your finance team always looking at it. Always looking from the point of view of what are the requirements of the business going forward. In other words, what cash flows do you need to continue to grow your business? What cash flows do you want to ensure that your shareholders are rewarded? And debt is an important part of all that. And by the way, of course, those debt markets come and go a bit too. Whether it's the bond market or the banking market and so on, as well as the equity markets do go up and down, or the availability of equity. It's one thing to say, well, yes, we think we can, we should be putting some debt on this particular project, but it's not available, so, or you'd like to put more equity, but that's not available. So, you've got to go with the flow a bit from time to time as well. And that's another reason, Jonas, to actually be diversified. In other words, get into metals and commodities that do give you that sort of diversity and a range where people will say, well, we like to have some gold in the portfolio because it's a hedge. When things are tough, people will, there's a flight to gold, so as to speak. So always good to have some of that in the portfolio, so to speak. Steel industry, met coal and iron ore, the whole information technology, communications and electrical and energy transition industries, all of those, be in copper. So that's the sort of very high level strategic thinking, if you like.
Well, you can't get any more bloody high level and strategic than CRE Insurance Broking Services, can you, boys?
Not at all, mate.
Mate, I was talking to Tari the other day, and holy snap and duck shit, there is some thought from the CRE crew that goes into protecting mining companies and mining services companies from risk.
Tell me, Matty.
Oh, mate, I won't tell you. I'll get them to tell you because, mate, the offer still stands, doesn't it? A free review of your existing insurance policies. If you're a mining company, mining services provider, there might be gaps you don't know. Doesn't matter if you own the mine, you want to service the mine, you need good insurance, you need CRE to broke the policies for you for Australia, Africa, or anywhere in the bloody world.
How often do we see surprises to the downside in releases, mate? Well, guess what? I'm pretty sure the best people to price that risk are the underwriters. So get in touch with CRE Insurance and sort it out.
Mate, if you want to put out a positive ASX announcement because you had a sensational insurance policy and you want, which could be share price accretive, it's only going to happen if CRE broke it for you.
It's the unknown unknowns that are really scary. And you have a chat with these guys. They know every single in and out of the insurance game. Just get them to run their eyes over your report and you will feel more comfortable.
Mate, just turn insurance into a positive.
That's it.
We need positive insurance stories out there. CRE are going to deliver it.
Go CRE.
Oh.
So at a personal level, by the end of 2008, you're leaving Oz Minerals with a few other things on the horizon, but there was a sort of publicised termination payment that didn't get voted through at the AGM. Was that disappointing from the perspective you'd been at the company sort of 14 years, you'd led it for a long time? Was it sort of understandable in the light of everything that had gone on as we sort of just discussed? How did you feel about that at the time?
Look, I think it was a bit unfortunate timing, you might say. I mean, right in the middle of the global financial crisis when equity markets have been smashed, I mean, countries have been smashed, commodities have been smashed, companies have been smashed, individuals have been smashed. So asking for approvals for anything, and of course you have to, if you're making payments to directors, various other things, whether they're termination, whether they're, your accumulated leave, whatever it is that you're asking for, you're always going to get a bit of a negative response out there. So it was probably more unfortunate timing than anything else, really. I mean, at the time, not a great time. But, you've got to, from out of adversity comes opportunity. As far as I was concerned, that's always been my attitude to it. So we grew back and the companies sailed off and did very well. And then between myself and my partners and various other people, we actually got into other businesses, got into other things. So we sort of recovered, refreshed, and re-emerged.
That's a real standout feature. What you just mentioned there, something I really noticed digging into the sort of experiences you've had, that the same names keep popping up in and around you, whether that be from your Rio Tinto days to your Oxiana days through to your EMR days. And from the outside, I think that's quite an admirable trait to work with people for so long. What's the kind of thinking there? Have you just got a good group of people that you enjoy working with? Are there secrets? Is it a bit of a to and fro at times? How do you think about it?
Well, look, the way I think about it is very lucky. Very lucky to have had the so-called career, if you like, in terms of Rio Tinto and the Ox and various other things I've been involved in, including the mighty EMR that we are today. And very lucky to have been associated with some amazing people, and some of whom are still, with us and working with us and so on. So I've always, had great admiration for their capabilities, and without them, in a way, we wouldn't have had the things that we've been able to achieve over that period of time. So that's the way I think about it. I think that they are, we're part of team. Nothing more powerful, really, than people working together in teams. You see that, we see that, and it's so important in what we've been through, particularly those volatile periods. I mean, the team really, really comes together. When things are a bit on the tough side. So that's been terribly important to me in terms of survival, but terribly important to them too in terms of all of those people working together. So it's not as if it's a team of 25 players. It's a team of a few people, including Tony Manini, Jason Chang, and various others that we've worked with over the last 20, 25, 30 years. And as I say, Jonas, I've also been, lucky enough to work with a whole range of wonderful people in various areas, whether it's in Rio Tinto, CRA, FMG, for example, and all of the other sort of industry groupings, if you like, around. So not just the companies per se, but also the advisory groups and the METs, the mining equipment, technical services people, and so on. So I feel very lucky that I've had that experience and, still working with them.
So another group you've worked with is Fortescue Metals. You joined as a non-exec director in late 2008, eventually became the vice chairman there. What was that like? I was reading presentations, last night about Fortescue from 2008, and it's remarkable. The speed at which things were built, put together, put on a ship and sent is sort of mind-blowing, and you just really wonder whether you can do something like that today. But what was it like, at a board level? Obviously, there was some brushes as well when markets got tight. How did you sort of see your role there? Can you sort of speak to the experience overall in that sort of entrepreneurial culture that they have?
Well, look, very interesting and very exciting. No question about that. From 2008, and we were back in 2008 just 5 minutes ago, and it was a pretty tough time, right? So I came on the board then as a non-executive director, and I spent 8 or 9 years there, all the way through to vice chairman. And it was a challenging time, but remember, China was still growing and growing very fast, right? So yes, there was the GFC, and that impacted every country on the planet, but China came back very, very strongly, and FMG was growing at the time. FMG was dedicated pretty much entirely at that time to the China market. And it was, pretty adverse conditions in terms of the competitiveness of the industry at that time. But very good support from China, very good support from all of the customers in that part of the world to be able to continue to grow the business. Now, and Andrew, just an amazing entrepreneur, amazing vision and foresight. And an amazing Australian, really, the way he's been able to build that business, but also same in terms of teams. We're talking about teams a bit earlier. I mean, people in that team were, apart from Andrew, were just amazing. Nev Power as the CEO, Peter Mers as the development director, Stephen Pearce as the CFO. So just a terrific group of people at that senior management level, and then the board. You've got people of the capability of Ian Burston, of Herb Elliott, Elizabeth Gaines, Mark Barnaba. So these people are just fantastic, and it was also a very clear focus, Jonas. This is this is what we're going to do. Well, I know. We're in these tenements and these mines. Here's the vision. These are the things that we're going to do over this period of time. We've got a very good market position, and we've got very good teamwork, and we've got very good culture. And we will move at the speed of light, if not faster, if we have to. And that was the type of culture that was had, and we're able to do it. Now, you've got to have a bit of luck along the way. Of course, you've got to have the wind behind you at certain times. But we're able to get through some of those difficult times, and of course, build. It is whatever the number is, the $50 billion, $100 billion company. From small Acorns.
So you're not sort of sitting still. At the same time, you're building EMR. So 2011, 2012, start raising that first fund. What is fundraising for a mining private equity group? There wasn't many of them at the time. There's still not too many of them. What was that like?
Well, look, again, never simple, never easy, but you've got to have the right group of people. You've got to be going to the right markets, and you've got to have a good sort of, if you like, vision, culture, and pipeline. You've got to have a good pipeline of things that you are looking at, that you've got an option on, or something that you've done a lot of work on, to be able to show people that these are the things that we want to get on with. So it doesn't mean you have to do all of them, but you want to be able to show them all of that. And of course, I think we were coming off during that early part of the 2010s there, that sort of second decade. We're coming off, the oil and gas business in the US was going very well. Most of our limited partners were American limited partners, so that's where most of the capital came from, at that direct capital. They had a surplus from oil and gas. They were looking to get into mining. They didn't have a lot of mining exposure. They're very familiar with the private equity model, whether it was oil and gas or other things. So, again, we were good timing, good luck, and a very, very good pitch pack, and a very good team of people with a good, strong track record, Jonas. They were the sort of the key features, if you like, and a very clear focus on those things that we wanted to invest in. We didn't want to be all things to all people. We wanted to focus on the copper, the gold, the base and precious metals in that area. We wanted to focus on metallurgical coal as part of the whole steel business. And we wanted to focus on potash, which was part of the whole food, fertilizer, thematic, dynamic, long-term type of thing. So a focus, a vision, good, clear people, good track record, and great networking and relationships, particularly in the Asian region where the growth was and continues to be.
So you mentioned good timing there, and that's a really interesting one, because you raised ultimately 3 funds now, and the timing is different at each point, and this is one of the critiques, if you like, of mining private equity, is that you have to get the timing right. It makes the repeatability hard. But the timing, like you said, did in fact turn out quite good. You picked up a lot of assets in that sort of 15, 16, 17 period when commodity markets were, in the doldrums a bit. How do you think about repeating that, given, a lot of it's dependent on the cycles of the commodities?
Yes. Well, again, usual story. Never simple, never easy. All the usual risks are sort of available to you, all the pitfalls and risks of our industry, if you like, and cyclicity and volatility, all of those things are sort of available to you. And it's impossible to get the timing absolutely right. But as I say, as long as you've got that strength of your people and background and experience and focus and persistence is another part of that, right? I mean, if you miss it one cycle or year, then you have to have sufficient continuity and longevity to be able to pick it up next time around. So I think good assets and good people will survive all of that. So you've got to stick with that thematic and be persistent about it, type of thing. So again, usual story. You've actually got to get out there. You've got to sell your wares. You've got to spend all of that time telling people about your story, and the rewards are there for sure. So you can't get absolutely everything right. That's for sure. As I say, you need some good luck as well as some good timing, but it's usually lots of very good hard work that actually sees off everything.
So I want to talk about a number of the deals you've now done. So in that period, you picked up Kestral. It's the first one I'm keen to talk about. Queensland Coke and Coal asset. A lot has happened since you picked that up in that period. The standout feature to me is the change in royalty regime in Queensland. How do you think about that new set and the government sort of changing the goalposts, if you like?
Yes. Okay. Well, look, Kestral was a Rio Tinto asset, so we knew, of course, Rio Tinto, obviously, and we knew the asset. We wanted to get involved in metallurgical coal. We knew that when one of the bigger companies is looking to sell over a period of time, well, you know that some of these assets will just not get the capital, they won't get the attention, they won't get the management and so on. So in a way, it's a bit of a happy hunting ground for people like ourselves, whether we're private equity or building this or that. So you can, if you maintain those relationships and obviously pay the right price, then you can see significant upside there. And we saw that in terms of it had a very long life, so you're not dealing with something that was all going to be over in the next 4 or 5 years. Very long life, you're out to 25 and much beyond that years. So you had time to do the work. And we saw that the capability of the team, the capability of the equipment, and the market, if you like, for that particular coal was in very good shape. So all of those things we saw, and that's why we got involved. And we were able to increase production, reduce costs. I mean, we're not a slash burn and churn type firm. The best way to increase or to reduce costs is increase volume. That'll get the unit cost down, so to speak. So it was actually very successful from that perspective, and still is, and operating very well. Doesn't mean you don't go through a few humps and bumps along the way. The bump that you refer to in terms of royalty rates going up very significantly, definitely an issue, and you've only got to look at the charts from whether it's BHP or Anglo in the public domain to see the sort of imposition that royalty is in terms of their all-in sustaining costs. It's one thing to have your people and your labour and your equipment and the energy that you need, and they're the main operating costs, if you like. And on top of that, you've got a very, very, very high royalty regime at this time. Of course, we're going to be paying royalties wherever we are. There's not an issue. But this is a serious imposition. And well, what do? I mean, at City Hall, at the end of the day, of course, you go there and present and represent in terms of what it can and it can't do. But what that royalty can and can't do. But at the end of the day, that's the regulator, and you got to follow the regulator. So what it puts the weights back on you then to drive your cost base down, to increase your volumes, and probably to look at other not so much other commodities, but if you want to remain in that commodity, look at other destinations that suddenly have become more competitive because of the sort of fiscal regime has changed. So I don't know, a bit of a rambling answer there to that question on Kestral and royalties, but I should say that it's a crackerjack operation. It's one of the best, most productive longwall underground longwall operations in not only in the Bowen Basin in Queensland, but in the world. So we're very proud of it.
So how do you think about selling it then?
Well, we are private equity, so at the end of the day, one way or another, we need to sell. We need to transition out, if you like, at some point in time. So So the funds that we have is not permanent capital, it's 10-year capital with extensions. I mean, with your LP shareholder approval, you can extend, but you don't really want to extend. You want to be able to get involved in an asset, make your improvements, and then ultimately get out. So that's what we prefer to do, and there'll be a time coming for Kestral.
So to move to another asset, Lubambe is a copper asset in Zambia that you picked up a number of years ago. Since sold out a big stake in conjunction with Cobalt Metals, who are doing something a bit interesting with AI, trying to improve their exploration, targeting, and these sorts of things. Is that something you've spent a long time looking at, understanding?
Yes, well, we've actually sold it 100%. So just coming back, Jonas, just coming back to Lubambe, we got involved there 5, 6 something years ago in Zambia. Always thought Zambia, terrific place, by the way, in the copper belt on the junction there, the border between Zambia and the DRC. So, world famous copper belt. People have been mining there for a very long period of time. Lubambe wasn't the biggest mine, but it wasn't the smallest mine in the copper belt. It was owned by Vale and African Rainbow. They wanted to get out. That particular venture wasn't working out for them. We saw it as an opportunity not only to get that existing mine going well, in other words, hitting targets, getting the drumbeat, and beating out its 30 to 40,000 tonnes per annum of copper, but also to do the work on the deeper, what we call the extension ore body. We're talking several 100 million tonnes of very high-grade copper. Hadn't been drilled out. No real studies have been done on it. We saw that was an opportunity to grow very significant value. That extension ore body ultimately was renamed the Mingomba ore body, and that's now owned by Cobalt Metals out of the US and ZCCM, the government company there, and the mine. So that we've split the project from the existing mine itself. The mine itself is now owned mainly by JCHX, the contractor, the mining contractor there. Again, we know very well. They've been working with us for years and years out there. Between them and, again, ZCCM, the government entity, is also a shareholder, minority shareholder in that. So you've got the mine, sort of 80-20, something like that, JCHX, ZCCM, and then you've got the Mingomba ore body, which again is 80-20 Cobalt Metals. Cobalt Metals, very good people. They've done an amazing job with their exploration technology, badging as AI. They've raised significant funds, and they've paid us for that project, for the Mingomba project, and they're working very hard, drilling it out, increasing resources, increasing reserves, getting all of the relevant studies done, and growing very significant value. Yes, it's a bit deeper ore body there. Starts at about 1,000 metres or thereabouts, but very, very high grade and in the copper belt. So you've got established infrastructure, workforce, a social license. So we provided them effectively with the social license to operate there, given all of the work we did at the mine and that particular project. So they are pretty well good to go. They've still got work to do there and getting the studies done, but then that mine will definitely ultimately be built.
So to bring us a bit closer to home, Ravenswood is another asset you picked up not all that long ago in 2020 from Resolute in a consortium to buy off Resolute. That's now had 4 years of investment. Output has expanded significantly at the asset, and it's in more broader terms not a bad time to own a gold mine. How do you think about selling that one? Is this one that's going to only play out in a number of years' time, or is that something in the back of your mind already?
Well, look, Ravenswood has been good success story, no question about that. But again, the usual story with these things, Jonas, nothing's simple, nothing's easy. Everything has its humps and bumps along the way, so as to speak, in our industry. It tends to follow us around. So, yes, we bought it during COVID, and we, to the end of 2019, so 2020, yes, we closed it. And we've spent these last 4 years and several $100 million, expanding and improving that operation up to, well north of 200,000 ounces per annum, capable, Queensland's largest gold mine. In fact, we've created it there just to the south of Townsville. Going back into history, we bought it from Resolute and various payments over a period of time, some of which are still to come to Resolute. Resolute was very, very focused on West Africa, doing the London listing and so on. So Ravenswood wasn't going to get any capital. And so we saw it as an opportunity to inject serious capital and grow that business. And we got it right in terms of gold, clearly. Good as gold, as they say. I was talking a bit earlier about the early 2000s when we sold gold at $220 an ounce. It is now more than 10 times that, 20 years later. So that's a terrific return. Gold is always going to be in long, strong demand. It's a commodity, it's a currency, it's a store of value, it's a hedge against geopolitical and financial uncertainties and so on. So you want to be as long and strong as you possibly can in gold. At the same time, of course, we are a private equity firm, so we need to actually continue to turn over assets so we can go again back to the market and look to get another fund, so as to speak. So if the asset is at its where we wanted to drive it to in terms of volume, in terms of costs, in terms of exploration, upside and potential and so on, then it's, then of course it's available. I mean, actually, whether it's available or not, we've got plenty of people, Jonas, knocking on the door looking to buy it because it's a quality operation in terms of tons, grade, resources, reserves, all-in sustaining costs, and it's right there just to the south of Townsville. I mean, it's not in the middle of absolute nowhere type of thing. It's a really good place to operate. Anyway, that's how we think about Ravenswood at this time.
So another group of assets you picked up in that mid-2010 period was Capricorn Copper, Golden Grove, asset out in Chile as well. These, the two Aussie assets come together in what's now 29 metals, ASX listed. Obviously, people will be familiar with that one. I want to dive into the exit sort of strategy. So that was listed in 2021 and EMR maintained a decent stake in the business, which it still holds to this day. How has the sort of thinking there changed? Would you do anything different with hindsight?
Look, the vision there was to take those three assets, put them together and form 29 metals. We thought that was the best strategy at the time in terms of exit. So you've got Golden Grove operating in Western Australia. You've got Capricorn Copper operating in Queensland. You've got a Chilean asset. Chile, is still the world's largest premier copper producing country. So great region with plenty of upside over there. So we thought the whole would be better than the sum of the parts, if you like, in terms of putting all of that together. And the market was calling for publicly listed copper and still is, still calling for them. Okay, so we thought the best path at that time was to do that. And generally speaking, that's true, right? If you've got, you will tend to get a better rating for a number of assets rather than just a single mining operation. So we put it together. We listed it at $2. We returned some money to our investors. We left some money in the company to continue to grow the company, so to speak. So we listed it at $2 per share. It actually it was very successful, got done. The stock price went to $3.20, $3.30 something, and today it's back in the 40-cent zone. So what went wrong there? How does all that work? Well, markets come off clearly, but we really underperformed in a couple of areas. One was effectively external forces. There we had a severe rainfall event up in Queensland, north of Mount Isa at Capricorn Copper. It took on more water than you can actually ever believe. Much of it is still there, and we were looking to release that over a period of time. You can't really operate in any way, shape, or form near capacity when you've still got that water there. You've got to treat it, you've got to release it, so it doesn't happen overnight. So not a simple matter. And of course, many of your treatment facilities, whether it's ponding or whether it's the water treatment plant, underwater. So the damage is still to be repaired, if you like. So we've got to get that done. So that has been that's been a very serious blow for the company, and we couldn't have done much about that, right? We had all of the diversion channels in place. We provided for one in 75 or 100-year events, and we got one that was one in 250-year event type of thing. So we're in trouble there. And in Western Australia, I have to say there was some underperformance at the Golden Grove operation as well. So that was more in our control. But you will remember during that time, you mentioned 2021, 2022, you got iron ore going gangbusters. You've got nickel going very well. You've got lithium about to start, and you've got gold going very well. So WA was hot to trot in terms of the market for development activities, mining activities, fly in, fly out people, and so on. So with that single operation there in the West, our costs were up and our volumes were down. So therefore, but we've recovered brilliantly since then, and now in much better shape at Golden Grove, and a very good plan for Capricorn Copper. So, bit of a long story there, Jonas, about 29 metals, but those two Australian operations and so on back on solid ground and footing, and the Chilean asset, really not a lot has happened at the smaller end of town there with Red Hill.
So to go to Europe just briefly, West Cumbria Mining is a company you're involved with as well. That's had a sort of back and forth with the government there, and a pretty big ruling has come out just recently there. Not so specific to that, but how do you think about mining in Europe? Are you very cautious of going? Obviously, you got interests in other parts of Europe at the moment, but has that kind of put the nail in the coffin for how you think about allocating money in that kind of part of the world?
It hasn't put the nail in the coffin. Obviously, always open to opportunities wherever they are, and you have to roll with the punches, of course. And at the end of the day, you've got to follow the regulator. As I say, we do three things. We're business people, so we follow the market, we follow the money, follow the trends. We follow the regulator, because without doing that, you can't do anything very much. And you follow best international practice. That's where you must have that beacon in the night. You must follow those things. Okay, now within that, when you look at a project, wherever it is, whether it's in the UK or whether it's in Eastern Europe, Western Europe, it's Spain, we're in country or Africa, or the sands, wherever you are, you will always look at, what are the tons? What's the grade? What's the quality? What's the process? What's the life? What's the costs? What's the upside? Is it a stable and secure domain? Can we operate here? And can you get out? In other words, can you exit? So we talk about a stable and secure domain. That's really the question. What are the country risk type factors here? Is it the national government? Is it the provincial government? what are the rules and what are the regulations? What about the workforce? What about the infrastructure? What about your social license? Can you attain, retain, and sustain your social license? Because without that, you might as well not show up anywhere. So you've got to be convinced that you can actually embed yourself with those local communities, earn their trust, earn their confidence, earn their support, and earn their cooperation. And so they are the key factors.
Very, very comprehensive. I like it. So to round out the conversation, I want to speak about a few more sort of contemporary and forward-looking aspects of mining, specifically in Australia. So as we touched on before we started recording today, obviously a big event sort of happened in New South Wales. Perhaps it wasn't acknowledged how big, in the happening of it as it has with the ramifications of that. Obviously, I'm speaking about McPhillamys, and there's been a few other sort of similar-ish decisions that have been made. If you could speak with the sort of government officials, what's the sort of the line of thinking you would tell them?
Yes, well, look, and again, I don't have the detail of some of those things, but the signals have obviously been fairly negative, you'd have to say, about that, particularly when you go through a long process. We actually don't mind. The industry understands and doesn't mind going through a lengthy process, whether it's to do with environmental impact assessment, whether it's to do with heritage assessments. You've got to follow the regulator. You've got to do your work well. And Australia is absolutely outstanding at having the people and the consultants and the firms and so on to be able to do that. We do that better in Australia than anywhere in the world. And that's why anywhere you go, it doesn't matter whether it's the rainforest of North Sumatra or the Atacama Desert in Peru, you'll find an Aussie, mining engineer or environmental scientist there, because we do our work really, really well. What you don't want, what you prefer not to have, are surprises. In other words, get to the end of all of that, because a lot of time, a lot of money, a lot of effort, and find that you get knocked out for something or other, and you're not able to redress. So how does that work? Well, you've actually got to stay close, stay in touch, stay close with all of those people, all of those stakeholders during that period, to try and be sure that there are no surprises, Jonas, at the end. That's what you don't want. The regulatory regime in Australia is about as good as it gets in terms of the world. You want to see some of the regimes in other places type of thing, but it doesn't mean that you won't have glitches, and it doesn't mean that there isn't room for improvement in those things. And we're talking with governments and regulators, state, federal and local, all the time. And you saw the other day 3 coal operations in New South Wales got their extension permits and so on. So, and our business at Ravenswood always been able to get those permits. Our business at Golden Grove always been able. Doesn't mean it's not, lots of hard work and time and so on and so forth, but you're always, generally speaking, able to get it, because they tend to be, like-minded people. Because it's a mining country, and because most people in Australia, as you know, are highly supportive of mining. They actually understand what mining per se, and the whole mining services area, and all of those things that sort of depend on it and hang off it, does for the country, and will continue to do. And we're going to continue to be busy, Jonas. That really is the point about the future here. In terms of the next 10 years, 20 years, 30 years, we're going to continue to be busy, because there's long, strong demand for all of the commodities that we've just been talking about. And the energy transition has given a boost to that.
That said, it still does have, perceived negative impacts on investing in mining globally. Australia is seen as one of the sort of safer jurisdictions. Now, you could kind of argue that less people in the space makes more opportunity for EMR Capital, but ultimately we do need a lot of money coming in to develop a lot of these assets. You mentioned before Chile,
Yes.
Some of these assets require a phenomenal amount of money all over the sort of world. Does part of it concern you at all that it might put off capital that's sort of needed to develop these assets?
Definitely. So there's no question about that. The concerning, the regulations are increasing, and we understand that in terms of population increasing. We understand that in terms of, people's expectations are increasing, if you like, all of the time. As I say, we never mind actually going through the work and responding to all of those sorts of things. It just takes longer. It's a bit harder, so it takes longer to get permitted and so on and so forth. Okay, so we're going to have to do that. Doesn't matter whether you're here, by the way, or in Indonesia or Chile or China, for that matter. It's just going to simply take you longer to get permitted. So we're happy to put up with that. So what it makes you do, of course, is focus on those commodities that are already in some form of short supply, if you like, or challenges to supply, because there are more challenges on the way. And that's why we like very much copper, we like very much gold, we like other base metals, and we like metallurgical coal, because there's no substitute for that in the steel industry. And we do like the fertilizer space too, expanding populations, increasing diets and so on. So there'll be good, strong demand there. So does it? So your question was, well, does it mean that you're always looking at other places, always looking, whether it's Australia or Africa or South America and so on, always looking at opportunities there. Canada, we're looking at a number of opportunities in Canada at the moment. What do you want? You want access to land. You want access to those projects, you want access to people, and you must have access to capital. And whether it's the public markets, and there's no better public market for capital, particularly for the smaller guys, than Australia. Because, the ASX, terrific platform, world-class platform, doesn't mean it doesn't have its nuances either, so to speak, but a very good, proven platform. And has actually been very good over the past 10, 15, 20 years in terms of being able to access capital. But you also must be able to access the debt markets. And that's where some of them are sort of open and closed. Some banks are saying, well, we won't lend to this, won't lend to that, we're out of mining, so on. So that's always a bit of a disappointment, Jonas, when those markets actually close to you. But it just makes you go a bit harder at those that are open.
So you mentioned the commodities you're interested in. Last question, out of the four, potash, coke and coal, gold, and copper, what is the one you'd pick if you could, just for say Fund 4 of EMR Capital? There could be one focus.
Copper and gold. So the single commodity, copper and gold.
They come together at times, so it works.
Well, copper is red gold, of course. So, no, look, I think copper as an industrial metal, you can actually, in a way, price it in terms of, long, strong demand, challenges to supply, great diversity of demand, and getting a boost from the energy transition, and it's getting a boost from AI. Just think of those data centers. Think of the power, the energy that's got to go into AI. And everything needs copper, one way or another. So that's definitely a pick, but never forget gold. In fact, we think that gold, we're looking to see gold, Jonas, as a critical metal. We think it's critical that everybody should have some in their portfolio.
Beautiful. Thanks for sharing your insights, your experience, and your time.
Good on you, Jonas. Lovely to be here.
Bloody great work, JD. Very insightful.
All the thanks
what
to
a journey.
Owen for coming on. What a journey it was indeed, mate.
He wouldn't have come on if MMS weren't our cornerstone sponsor.
No, and I think
he actually said that.
You could say the exact same for Grounded, Cross-Boundary Energy, Sandvik Ground Support, CRE Insurance, Greenlands Equipment, K-Drill, Australian earthworks and haulage. You could say the same for Spark. You could say the same for all of them.
And MMTS as well. We can't even forget about that.
Absolutely.
The absolute gurus. Thank you very much for that, JD. Thanks, Owen. And Hootaroo Money Miners. Enjoy the weekend.
Have a great weekend, Money Miners.
Hootaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.